The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. I'm joined by Paddy, not Steve, not Pete. Thanks for turning up, fella.
No problem.
I think
reliable.
I think Paddy and Steve are queuing at petrol stations. I think. It's, I tell you what, I got up early this morning, literally, and I get up early anyway, 4:00 this morning. But I try to stay in the weekend. I can't. I cannot stay in bed. So I woke up at 4 this morning. I go to the toilet. I can't go back to sleep. So I sat there and so I'll just write some stuff down for the Weekend Podcast maybe. And then I turned the news on and there was talks about petrol stations. So I went out. I went to Asda. Right? I thought, I'll just beat this. I'm not going to queue up at prime time. I'll just get up early. I'm up early anyway. So I go, I'm casual about it. I'm not being one of these petrol station idiots. So I went to Asda.
But why are you going at all?
Exactly. So let's get some petrol. Let's get some diesel. So I went there, right? And there's cones across the thing. Sorry, handwritten note, station close. I thought, I thought this was going to be easy. So I went to the next one, Shell, up the other end of the town there, closed. Right, let's go to the Tesco one down the road. Went to Tesco, closed. So what the heck? And all of a sudden you start getting this panicky feeling, you know?
By then you'd run out of diesel.
Yeah, I know. That was part of the... I don't weigh that up. So how much distance am I going to do here? I don't want to use too much up, you know? But
100 miles.
Yeah, 100 miles. Run out 100 yards before I joined the end of the queue and I run out. But no, but literally, and then I thought, oh my! We start having this panic attack thing. Oh my god, it's nowhere. I'm not on petrol for months, you know. And so then I went to the next one, which was near. In fact, a new converted a Waitrose. It used to be a co-op, but now it's a Waitrose. It's really gone up market, and it was full. The full court it opened at 5 in the morning. It was just gone 5, and every pump was being used. There wasn't a queue or anything, but every pump was being. I said, "Look at these imbeciles! Look at them! I'm the only sensible one here." so I pulled in, and you know when you get that click noise when your petrol tank is full.
Yeah.
I had about 40 of those. I kept pulling the nozzle out. My tank could not get any full. I don't know. It's just mental, just herd mentality, isn't it?
Well, not really. It is, but yeah.
I was literally going. It was so full. I was going up in pennies. That's all it was. Right.
When you say mentality, I think you just mean mental.
Mental, yeah. And so I just strolled casually into the Waitrose, shop, the garage shop, pretending I wasn't just trying to get petrol. Pretending I was always up that time of morning anyway, and this is my normal routine. So, how long has it been a Waitrose then? 27th of August. Yes, and so there's nice, is it? Yes, a lot better working environment, yes. And so I came out there and I thought, but you know what? It's odd. It is that mentality. You can slip into that quite easily, you know? And I had 3/4 of a tank already.
That is insane.
I know, but you know what? I was just up early. I thought, and we got to pick the kids up there because at the mother-in-law's, which is driving up the Essex. I thought, right, rather than just queue for 2 hours, prime time, just trying to make excuses here, trying to queue for 2 hours, I'll just get early. But when you start going...
justifiable if you've got a journey to do. You haven't just gone out, oh my God, just to fill up that empty quarter of a tank. No, okay. I did a
survey on Twitter,
right.
And I said, I did say, in fact, it's funny how some people... the thing is, you can always say some people, obviously people are going to work and care workers and all that, you can always say people deserve it more than others, you know? So I did a survey saying, let's look here, have you filled up your car in the last 12 hours? I only put this on like an hour ago. 24% said, 24.3% said yes, 6.8% not yet, but I'm going to, and 68.9% said no. I feel those people are a bit pompous, and no, I haven't, and I will not. I'm not part of the herd. I will never do it.
I'm in that group. So.
Yeah, no, I will not. And in fact, my mother spoke to her mother because the kids are up there, and her father called me a petrol station W. A petrol station W, I said, yes, I am. I said, no, I said, well, you can use you can fill in the rhymes with the anchor. But you can fill, but I said, no, listen, no. When I went to Waitrose this morning, the station was full of them. I was the only sensible one there. I got to say that. The rest are idiots.
It rhymes with petrol station tanker.
Yeah, it works very well. Someone just replied, have 20 miles left, heard about the panic buying, so cracked open a beer. We'll try in a few days.
Exactly. I salute that man.
Do you know what? I think this day and age, as well, it's like the coronavirus, you don't really need to get petrol, do you? I don't know. I mean, you can work from home.
Life. Yeah, my life these days, work from home, but rarely use the car. I don't even know how much fuel I've got in it. I'm not that bothered. So haven't been out, not going to go out. I don't care.
It's the mentality that's trying to get something you can't have, And that's how supply and demand works, isn't it?
That leads us to the markets.
Yeah. But let me say one thing. I don't want to bang on about Brexit, because I know you did say this is all Brexit's fault. But you should honestly, to anyone, and I'm not going to say this is not Brexit's fault, it's part Brexit's fault, yes. But anyone, 9 o'clock till 9:30 on Radio 5 Live, you can do catch up. Rachel Burden's on there. She has about sort of 5 HGV drivers on. And I didn't know.
This was on Friday, wasn't it?
Yeah, it's on Friday. And very interesting from their perspective. And the one guy, they were saying basically, so listen, there's been a shortage of HGV drivers for 15 years, and it's a the thing is, it's been low wages. We're treated badly. We can't even go to toilets in most places. They blame supermarkets. A lot of them blaming supermarkets because for an HGV license, you need to travel tankers, petrol tankers. You need an extra sort of safety license on top of that, And so he said supermarkets are poaching all drivers first and foremost. But they said the pandemic and Brexit have sort of highlighted the problems with the industry in this country. They said wages have been going down since they've imported cheap labour. Wages have been going down, and the standards been going. And this one guy kept saying, "Listen, I'm not a racist, right?" But to be honest, he wasn't being racist. He was saying the standards of European drivers, Eastern European, I think he was saying, compared to Britain is different, and they'll just pull in anywhere they want to abide by the rules and laws. But he's saying, the thing is, they imported a lot of cheap labour, which made it unattractive to UK workers. And for a long time, he said there's always been a shortage. And only now we're seeing the problem because those cheap labour is here. So Rachel Burden said to all of them, should we then import some driver? And they all said, no, that's the problem. That's the problem no one was seeing. Said for a long time, there's been HGV, no one's invested in it. Said, what you don't understand about, no one cares about HGV drivers, but everything you get in your shops is delivered by us. We deliver it all the time. We're under stress, under time pressures, not helped by the supermarkets, always putting pressure on you. Miss a slot by a couple of minutes and they'll penalise you in some way. And so this is the problem. And so bringing in cheaper labour does not help whatsoever. So we they said, some of them said, now we're going to get paid better wages. That will attract more people to the industry. So hopefully within the UK. But now the government just said temporary visas now. Let's bring in more cheap labour. So it's part of Brexit, but it doesn't. The import of cheap labour doesn't help the UK drivers.
But given all of that, it doesn't mean that necessarily, even higher wages wouldn't necessarily mean that it's an attractive job for British people to do. So you might not solve the problem. So I hear what those guys are saying, but you've got to solve the issue. And it makes me laugh when we're planning to ease lorry shortage by issuing temporary visas. You're like, oh my God, you couldn't make that up.
No, I know that, but
that is insane.
No, but the thing is,
how about not do Brexit? And then we'd just have, we'd have a free supply of labour.
That covered the cracks. That's what we're saying.
But okay,
but
listen, the cracks.
But listen, it will. Market forces work. There are now lorry drivers getting that won't be sustainable. About 50%. Plus wages overnight. There's a guy there who's on like 17 quid an hour, and he's got like 28 quid an hour. And he said, and this is across the industry, you can basically charge what you want at the moment. That will attract people in. When you can earn money like that, when it's above sort of, similar sort of industries, it will attract. That's the way market forces work. And so what will happen then, though, you'll get an oversupply of lorry drivers, and that wage will come down, but hopefully it'll settle at a higher level than it was previously. That's the way market forces work. Yes, there is pain, and regulation has to be introduced to stop the pain for some people, for consumers who can't afford, like you said, price caps, again, on gas. Gas is... The price of gas has gone skyrocketing everywhere. It's not people consider it as a Brexit problem. It's not.
Yeah.
The problem with this is we are transitioning towards clean power, and we should have had gas storage, yes, but the price of gas is universally, globally very high. It's not just in one area. If you watch CNBC as well, though, they've also got problems with HGV drivers. It's not just Britain,
Okay, but can I just go back onto the HGV and the petrol tankers? Great, higher wages. Where does that cost end up?
No, I know, but but you've got to You've got to.
Right, and then who grumbles about that?
No, but exactly, and that's what.
Who grumbles about it? The Brexiteers that voted for Brexit.
No, but that's the issue. That one of these drivers said the problem is supermarkets are so competitive.
Yeah,
they're trying to beat each other, and that's driven by consumer demand. So it comes back to consumers, and we all want everything next day, fresh next day, and so the pressure is there from the consumer. But I do think you have to raise the standard of wages and living for these people. Like I said, for a long time we've heard HGV drivers saying it's an awful industry to be in. We're attracting no one in this country because literally it's low wages, long hours. They don't care about you at all. And I think now it's highlighted a problem. Of course, Brexit hasn't helped at all. I know that. But they said, import. They all said, don't import cheap labour again. That's a problem. That's why we're not getting.
They all said, the drivers,
I know, but
the consumers didn't. Right, let's move on. We're never going to agree on Brexit.
No. No, but it's funny. It's never as simple as we think, is it? I mean, I understand this. If I voted to remain, I would probably be saying it's Brexit's fault. But it's a bit deeper than that as well, because there are HGV...
And because you didn't and you voted for Brexit, you can't say it's Brexit's
No,
fault.
but what I'm saying is...
it is.
No, because if you look around... hang on, Pete, this is not specific to the UK. If you watch... I mean, the only business channel I can watch, of course, is US-based, but they have a major HGV problem over there. That's one of the, and in fact, there's one of the industry. Talking about tech, it's one of the industries they'll hope soon will be automated, aren't they? So they'll have, lorries being driven by robots, pretty much. So it's the jobs people don't want to do, markets. Let's go back. So supply and demand sort of sorts it out, but even with the price caps has messed everything up. The regulation on price caps on energy has also messed it up a little bit, So you try and help. You try and get in the way of market forces, and it messes up a little. You'll always have some kind of warp, or disjoint there between what's supposed to happen and what the governments join in and get involved with. Yeah, I think sometimes let business be businesses. Jumping in the middle of the businesses and trying to interfere them from the government level messes it up. Anyway,
let's talk about happier things. The markets actually were good this week.
Well, I just said that. Do you know what? Last night I tweeted. I thought, God, the market's shut, and I tweeted out the last 6 months have been hard work in the markets. I mean, really challenging psychologically. I've been in a bad mood for many a day. I went on holidays and it was tanking the market, and I was in a really foul mood. Sitting there next to a nice pool, you can have any drink on tap. The sun is out. The kids are playing with their friends. I can read my book, but I'm kept checking the markets. And God, they were tanking, and mentally, it's like a dark cloud over your head. It doesn't matter where you're sitting in the world. You can be on a yacht somewhere, but if your stocks are tanking, it's largely a mental thing. The market.
I think if you sat in abject poverty and
listen, I'm not comparing myself to poor. No, I'm not comparing myself to poverty. I'm just saying I'm an investor. I'm at a certain level of.
But investors,
yes. Everyone has their own issues, don't they? I mean,
absolutely.
Like I said, do you know what? We all believe having more money is the answer to happiness, or we think it is. But if you look at the richest guys in the world, like Jeff Bezos, Bill Gates, and even Elon Musk now, broken up with their partners. So if they're happy, what's happened with their lives then? Because so we know it doesn't. So we all it's all relative. We all have our own problems. But what I'm saying is it's largely a mental game, but really challenging last 6 months. But what I love about, and I said, small or micro caps, is that half a year of it being like that and really going nowhere and grinding lower can turn around in a week. You can get two good rises.
Steve's arrived.
Steve!
Yeah, so I'm a bit late. Well, I didn't get any notifications that this was happening.
I called. Just shut up, Steve. You've been at the petrol station queuing, haven't you?
Weird.
Is it a coincidence you can't see a phone at the petrol station, see, and Steve couldn't answer? Yeah.
No, I actually do have an excuse for it. I have got the new iPhone, and for some reason I'm not getting any notifications.
You said you weren't going to get a new iPhone last week. Do you remember that? You said, hang on. You said, yeah, exactly. Do you know what? I haven't updated. Look, you said, look at me, I'm a tech geek. I haven't updated for 4 years, my iPhone.
Yeah, and I said I was going to update. I didn't say I wasn't.
Oh,
I just said I hadn't.
So it's working out well for you then, the new iPhone. You didn't get any notifications. It's,
You know what it's like when you move it over, the apps don't all properly log in. I think Skype wasn't logged in as well, so that's why I wasn't getting called on it. But there we go.
Well,
I'm here.
Steve, good timing. I've taken one for the team and had to listen to Justin bang out about Brexit.
Yeah.
not
It
being
wasn't
the reason
Brexit. That's what I'm saying.
Oh,
Right, no, listen.
Right, carry on.
Steve, what I'm saying is basically, hard 6 months of hard grind, and I said microcaps. What I like about it, within a week, you can have a couple of good rises, and it completely change your outlook, your portfolio, and even your mental, well-being. Because literally, I found it really hard. A couple of days, not every day, but there've been days where after days of just grinding low at sideways and going down again, you think, oh my God, not again! How long is this going on for? And but it's lovely how in the last week, Polarian has risen, Escape Hunt has risen and bounced, and it changes, isn't it? And Paddy actually said on WhatsApp, he said, on the Polarian rise, he said that's probably my biggest daily rise in pounds ever. So and yet we've all been whinging for like months, pretty much it seems like, and yet in a week it turns around, doesn't it?
Yeah. I have to say, I mean, the markets move in mysterious ways, don't they? And I don't think I'll ever understand it, and it's always been the case, and it will always be the case. But that rise, and I'm not knocking it. It was lovely to look. I hadn't looked at my portfolio that day. I looked right at the end of the day. I was like, wow, where did that come from? And I mean, a 25% rise in an afternoon. Obviously, the cynic in me goes, well, there's something. I
think Jeff has made the call to Chuck. That's what you thought.
Hey. Chuck Jeff interface.
Okay, is that Chuck? Yeah, Jeff. Yeah, what are you calling? Well, listen, I'm on page 1,999 out of 2,000, and I'm about to hit that approve button. Yeah,
do you know what I mean? Or it's not the FDA. It's it could be somebody else like. Got wind of a big institution that's going to invest or something. I don't know. But there's some, you just think, how does a price move? In any other scenario, 25% increase of value based on nothing. I mean, like your house wouldn't increase in an afternoon based on nothing. It's the same house it was in the morning, but by the end of the day, it's 25% more valued, 25% higher.
Somebody knows something.
Well, I don't know.
Well, I'll tell you what it is. It is simple supply. Listen, if you understand the pressure, more people are learning about Polarian all the time. It's a viral thing. Especially with social media these days. People are sharing, retweeting, doing more research. There are people cotton on the story. There are people telling friends and friends about it, saying it's going to be a massive company. And for a while, sometimes it doesn't sink in. But also, you may have a tick up in buys all the time. So the volume's been going up. But you may have equally matched sellers. People have been in for a while, just want to de-risk a little bit before the FDA approval. And they'll cancel each other out for a long time. And all of a sudden, if that seller stops, but the buy is constant, then all of a sudden there's no stock. And that'll just take it up. It will take it up. And you can't. There's a big milestone approaching. There's more people learning the story. There's more people buying. Sooner or later, the buy pressure, demand pressure will just outweigh the supply pressure, of selling. And that'll do it.
And FOMO kicks in. I mean, it's a bit like the petrol crisis, isn't it? Is that herd mentality of going, oh my God, I'm going to miss out here.
I know and people, people will not just, as I keep saying, I tweeted out, so I bought this stock, first of all, in June the 20th, 2019 Polarian at 17.9 pence. That's my first buy. I said, I haven't sold any. I bought more on the way up because I think there's a lot more to come. Even really well now, a lot more to come. But it's nuts how people chase a price. That is not the way to make money in the markets, people. No. You've got to do your research and sit down and have patience. That's it.
But then the other interesting thing is, and we're all, I think, fairly well exposed, and I'm comfortable in my exposure. You do. Like I've been thinking, I think I said in the podcast the other week, like if FDA approval does come through, I'm very tempted to go, okay, I'll put some more in because the story has changed for a positive, and so it de-risks it even further, and you think, I'm going to put more in. There was a sort of temptation this week to, I'm going to add more in now, but the story hasn't changed yet, has it? It's just people buying and people in FOMO, whereas you've got to actually control your emotions a bit. No, I'm happy with my exposure. I mean, 30% of my portfolio in Polarian, I mean, I think that's enough, probably, but... tempted.
The psychology of the markets, I mean, I keep saying investing is largely a mental game. It goes back to the grind of 6 months of finding it really hard work. And, so I was on holidays and the stocks were tanking and I just couldn't enjoy the holiday because it was at the point where they were tanking hard. And I thought, I keep looking at my phone. But looking at my phone was just impacting my holiday. And then all of a sudden, within about 3 days in or 4 days into the holiday, they bounced. I thought, oh, good. At least I can stop watching this price now. But I mean, yeah, it's
like you would ever stop watching the price.
I know. But what I say is, the buy low, sell high. The most famous quote of ever, right? Is amazing because it's harder than that. It's a lot harder than that because when you just say it in black and white like that, you see it printed written down. It's easy, but you don't factor in emotions. Now, emotions is everything. We are, guided by our emotions. And I did say it a while back. I said, successful investors are able to disconnect the share price from the business mentally. So when they get volatile, they don't worry. They look at the business thinking, okay, that's still improving. I'm buying more. Now, a lot of people don't. When the share price goes down, they won't buy more because they think it's going lower. And that's it. And the share price starts to rise, they will start buying because they think it's going higher. That's the wrong way to do it. So that's why you've got to focus on the business. Always focus on the business. Oh, in fact, I said here, successful investors can mentally disconnect share price volatility from the business. The SP, or the share price in the short term, can and will move regardless of what the business is doing. In the long term, the share price will reflect the business. So focus on the business, not the share price. And that's how you get bargains. Because when the sentiment is low in a company, but the business, always focus on the business, underlying is doing well, buy some more shares if it's good value, And if you look at Polarian, even with this rise, the brokers have got a pre-FDA target of 135. So still not there, but yet it'll probably get in now because FOMO's kicking in. So, beyond that, it's obviously a lot higher than that. And in fact, like I said, it's one of these companies that could be a FTSE 100 company. And by that, I mean a market cap of 5 billion, 4 or 5 billion or more. That's more than 20 times where we are now. So, and it can do that. Absolutely can do that. I spoke to Richard on the podcast, and it was nice that he said, he's quite a conservative guy. And he said, whenever you're introducing new technology to a market, you go look at three things. Is it better than what's out there at the moment? That's option one. Is it significantly better, or is it nothing like what we have out there at the moment? And so we put ourselves in that third category. There's nothing like what we have out there at the moment, what we have. And so to me, if you put that in a market where it's needed, and you actually can't diagnose proper lung problems without the technology, then of course it's a game changer. It's a massive game changer. And people are worried about the FDA approval, but a couple of things that Richard said and Vadim saying, do you know what? If you look at the riskiest part of this FDA approval, in any FDA approval, is the drug part. It's the drug device combination product. But the drug is always the problem because normally the drugs are trying to cure people. And there's always side effects to any drug, like even paracetamol and all that. So there's all side effects. So this is how bad the side effects. You look at safety and efficacy. Is it safe? Does it work? And with xenon gas, they're not using the gas to cure people. All it's used for is to enhance the image of the lung. But it's been used before, and the safety profile is well known, and the FDA has approved other things, xenon gas, for use in other things as well. So, and at the moment, actually, I didn't realise this, the contrasting agents used for CT and MRI scans are radioactive. It's something called gadolinium or something. So they're radioactive. So I don't see why they would say no to xenon gas when they've previously said yes to it in other forms for other uses, and the current contrasting agents are radioactive. So I just see the FDA approval as very low risk, and I just see it going higher. I really do. But the potential is massive. There's risk there, of course, because it could be a small thing. But it's massive. Polarian could be massive. Absolutely massive.
But just speaking more generally, not just Polarian, that thing of when you've got something like that and you've got such a good story, the temptation to go to, I don't know, put more in, get 50%, 60% of my portfolio is strong. But I don't know. I haven't done it yet. And like I say, the story itself hasn't actually hasn't changed yet. So I'm trying to hold on and go, no, I'm not going to buy yet. But then if the FDA approval comes through and we suddenly see a 50% increase, then I don't know, would I invest then?
I think the thing is, what you see is, part of me, of course, I enjoyed that rise, but you're right. Your thoughts about putting more in are stronger, aren't they, when the share price is rising? And, and that's it. That's when you must resist. because there will be like that rise is welcome, but when you get a 25% rise, you get traders, and it comes back a bit, and and people will sell out. And so what I prefer to have is like 2% rises next 10 days, rather than sort of 25% in one go or 15, because then people don't really take that much profit in big chunks, So
and then also the exposure thing, which I know. You've definitely got to have, that's something we've all talked about and learned, is that you've got to have a bigger chunk of your portfolio in each of these stocks, to really make some serious money, hopefully. But you still got to draw a line somewhere, because you're still working. It's still the markets. It's still the world of small cap stocks. And it's, yes, all those things we're talking about could happen, but you've got to sort of temper it a little bit with like, but we've all seen curveballs before, and things drop back, and things happen, unexpected things happen. So you've got to try and control that emotion of like going, right, I'm going to put everything into this.
Sell the house.
Exactly.
Yeah. Well, I'm just thinking, right, I mean, I didn't realise this. The FDA do all kinds of checks down to even, suppliers of the manufacturing equipment. They check that, it can be marketed on a level that's said. And Richard said, look, if you look at the broker note, they come basically that's the blueprint basically. So they're looking at 100 machines by 2025, and that will create $45 million of revenue by 2025, and then 240 machines by 2030. And that's just in the US. And they said, but they're very comfortable with that level. Probably do more than that.
So that didn't sound very much. I would have thought they could have done more.
Yeah, well, you should ask Richard. Is he doing more than that, Rich? Well, they probably can, but I mean, that's the level they're comfortable with. That's the level the FDA check. Doesn't mean they can't do a lot more. I mean, if they get big orders, they probably can, but that's a level that they're going with, and that's in the market. That broken note's in the market. It's out there, and so that's what the FDA check against. And I mean, to me, that already there's 25 machines out there. So. And they're being researched and looked into, and papers written on them. So I don't see. I'm trying to find the risks here. Of course, there's risks. There's risks you can't see probably, but the ones we can analyse seem quite low. So I'm happy with that. And another thing is nice is just escape. And oddly, I did the webinar on Share Pickers Investment Club on Wednesday, and I said. It's basically, we've got 5 stocks, right? There's about 4 milestones coming up. I mean, Biome's just had their interims. It's fine. It wasn't as good as could have been because they've had global supply chain issues and stuff. And so one of the growth stories has been delayed, but it's kicking back in now, Q4, they reckon. So they'll achieve 18% growth top line this year, impact up to 40% then next year. But so that's gone. Biome. The next one is Escape Hunt, and I did a little presentation on what the interims will say, and I think there'll be a lot more, data there that they go on. And if you look at leisure, it's having a booming time. 10 Group, which own about 46 bowling lanes, 10 Group, released their figures this week. And they're having record figures. And I think that's going to happen with Plarian as well. With Escape Hunt. And also they've got Lakeside opening up. I've seen Lakeside. Lakeside is in end of October 22nd. The Lakeside is one of the biggest they've got. It has 4 VR rooms and 3 normal rooms. So that's good, isn't it?
Right.
4 VR.
Yeah.
There's one is the Halloween one. Sanctum looks quite good. But and then you've got Milton Keynes opening up. And that means that 19 sites, the target is 20 for June next year. So I'm confident they'll be way ahead of that. So I'm hoping that the news on Escape Hunt on Tuesday will be very positive. And that's why the share price is bouncing, I think. I mean, it's one of the things that's grinded lower. It went from 49 pence, it nearly hit 50, and then it came back down to 28 pence at one point, I think, wasn't it? It bounced off that. And then it bounced again off at 30, and it's starting to rise again now. But I like the chart in that. I did look at it on the webinar, and it bounced off that support level, 30 pence, twice. I thought, okay, there we go. And it really curved around nicely. And that's the same thing. You're just sellers grinding. There's an oversupply. It doesn't have to be a lot. It depends, on small caps. If they're not a hugely traded stock, you don't need many sells to make it grow. Because a couple of times, Escape Hunt was down, and Paddy say, Escape Hunt's down, and you say, what's happening with Escape Hunt? Why is it down? And if you look at the volume, there wasn't that much volume. It didn't need a lot to move it, in the summer months when there's no volume there. The seller will take it down. Just a couple of grand will take it down. So it's frustrating, really. But if I had more, I've got enough of it. But if I had spare cash, I'd have bought some more on that. Where you been, Steve, anyway? Steve, where did you go last night?
Funny enough, I went bowling.
Nice.
Did you see? Steve is playing at the leisure sector.
Well, we went to one of those all-you-can-eat, those big eats challenge pubs. Like the meals are ridiculously big, and then put ourselves into food comas and decided to go for a little game of bowling after.
Okay, well, where would you go? What was the food? What was it? The food place?
It was just it was a Green King pub, but they do these big challenge meals. But yeah, it was stupid amounts of food. Good.
Yeah, good. What did you have, Steve? What was the meal of choice?
Well, there's 4 of us, and we just got 4 of the meal challenges and just basically shared them. So we had a platter of steak, a platter of chicken, another platter of chicken, and another platter of chicken in different forms.
Was that one? Was there anything else on the side of that, or just chicken and steak?
Just chicken.
Well, it was all different kinds of chicken. So on the chicken one, you had
big chicken, small chickens,
chicken nuggets, chicken skewers, flattened chicken, spicy chicken.
I didn't realise there's that many different versions of chickens.
No.
It goes on, tickled chickens, stretched chicken,
hairy chicken,
hairy chicken, gone off chicken, smelly chicken, tasty chicken, just plain chicken, and chicken.
chicken licking.
That's like the old spam sketch from Monty Python. Spam and chips, spam and chips, spam egg and chips. Give spam egg and chips, or you give spam. Have you got anything about spam, please?
Yeah, and I was actually just looking at the photos as well. There was lots of varieties of sauces to dip in, corn on the cob.
Sauces.
And a bit of lettuce as well.
I'm watching his video. Steve, I'm looking at Steve's video. They're scrolling through. How many plates of meat?
Chicken wings.
Chicken wings, chicken legs, chicken beaks.
Chicken feet, chicken head.
Chicken lungs, chicken heart. We're using all bits of the chicken. The chicken hat, the hat the chicken wears, that's in there as well. Chicken shoes, chicken socks. Yeah, it is nuts. When you see that, right? Yeah. I do think sometimes, just overindulgence like that is. Yeah. And I do. It does make you feel guilty as a person when you see other parts of the world, suffering in hurricanes or and there's you boys almost killing yourselves overeating.
Eating the entire farmyard of chickens.
And do you know what the great thing about that? All that food between us cost £12 each.
Did it?
Yeah. It's 25% off the challenge eating on Friday.
Is there a way? I never heard of this. I think that's excess. That's how we become Americans. Really obese, isn't it? Yeah.
I went for a run in the morning, so it's all good.
What do you mean in the morning? This morning?
Yesterday. No, yesterday.
That was.
I need to get rid of the meat sweats this morning. I'm a little dehydrated.
Yeah. Wow.
Right. Wow.
But anyway, we went bowling after, and that was. We went quite late, actually, about 10:30, and we could barely get a lane. It was so busy, so that kind of is a good sign.
There you go.
Yeah. What I like about the thing, if you look at just the metrics on 10 Group, it's very good growth there. But what I do like escaping as well is, in fact, 10 Group have a joint venture with Houdini Escape Rooms, and so they're very busy. So that was in their release. But what I like about Escape Room as well, they've also got that added bit of the franchise and the corporate side as well, which they're now expanding. I've seen what's quite clever is, of course, you get summer holidays that are very busy, of course, with escape rooms and the kids and all that, and then they can flip, can't they, to corporate from that period up until Christmas. Then really get that going. And then, of course, the escape rooms will be busy again over Christmas, But I think what's interesting is in their last broken up, which is a bit of a date now, the average revenue per site was $500,000. I think that will gradually increase because you've got bigger sites now. Like the latest they've signed, Lakeside, is the biggest, and they'll be taking more than $500,000. So yeah, I'm looking forward to the results there.
Looking at the 10 Group, and obviously last year they made a loss, but the year before they were trading on a PE of 15. Yeah. So is that sort of what we should be looking to assess the value?
Yeah. Well, I was because the company gets bigger. Generally, their metrics will come down a bit, because they can grow less. But if you look at it, I think the EBITDA was about 10. I'm using EBITDA 15 for Escape Hunt because it's smaller, it'll grow faster. But also, like I said, it's got the very high margin of franchisees and the corporate side, which it's they've got 80% gross margin on those things on the corporate side because you've got one guy in charge of 300 people, whereas normally to arrange 300 people in physical escape rooms, you probably have 10 or more than that, 10 employees. And so they can do that with 1 or 2 people. So there's huge margins in that. And of course, the franchisees, there's no capital expenditure on those at all. Eventually, it's all money in. So whenever someone signs up to escape and a franchise, it's just all money in. They supply them with the kit and all that stuff. So that's why it's they've got a higher margin business. And to be honest, I think bowling is probably a bit more capital intensive than escape rooms, because bowling lanes and bowls and all that stuff, and big areas, they're all big old places. So and the maintenance of those,
and then the interesting thing with, and I've seen this before, Hollywood Bowl was trading at a PE ratio of 270.
Yeah.
Because they barely make any profit. They make like $1 million.
Well, no,
profit.
I was just about to say, because when we went bowling, there's 4 of us, and we were probably on the lane for about just under an hour, and it was 30 quid for that, for all of us. That's quite cheap, isn't it? For what you're getting So
what happens is, what you want is that you want someone like Escape Hunt to be a market leader. That's why you'd give them a bit of better metric, because if you are a market leader, all kinds of advantages come your way from, you get sponsorships, you get people coming towards you. In fact, like Gfinity now, they're at a certain stage where brands are approaching them to be on all their sites with campaigns, You get a certain size of a market leader and you get all kind of benefits from the margins, your costs are better, you get better sites, and it all, and you get sign-ups for people like, BBC, like the Doctor Who and Netflix. They only approach the big guys, and that's why if you look at sort of like Rightmove, or Boohoo, their margins are way better than any other people, because they're just market leaders. And so, that's why you'd give them a growth, evaluation metric a lot higher. But, 15's not high.
No.
If you can look across the pond there in America, their evaluation metrics are ridiculous compared to over here. So it's, whenever you look at a company, you always the most important thing, small caps, growth. Do they have growth? And that's Escape and Do. They got like 40%, organic. And this is like for like. When they did their last set of results, the trading update, they compared just normal growth of sites, and then they looked at the 8 established sites and compared them, and they were growing, and even in the few weeks they were open, they were growing. So it's nice that the more established they become, the more people learn about them, of course, because I still think it's a little bit under the radar. You get early adopters like Steve and his clan who'll try things all the time. But the majority of people...
like massive food binges.
Exactly. I didn't realise... Steve is talking about the food challenge like it's a well-known thing. I'd never heard of that.
No.
Well, it was a big thing years ago, wasn't it? It's not so much now, but...
Yeah. Well,
I have to say I'm not tempted. But, but can I just say, on that Escape Hunt, on the results, it's going to be Tuesday this week coming up. Am I right in saying that the post-period update will be the interesting bit? Almost?
That's a bit. Exactly. So because but they can say now what's happened, because when they first did an update in early August, I think it was, of course, the end of the period was June.
Yeah.
The thing is, they were shut up until May something, so they only had a couple of weeks of data to go on.
So, like, the results aren't going to be great because of that, but then the actual post-period activity is going to be interesting to see, isn't it?
Yeah. But look at this. On a like-for-like basis, even on that last update, on a like-for-like basis, site-level EBITDA from the company's 8 established sites increased by 83%.
Yeah.
So it gets better. In the last 5 weeks, occupancy has continued to grow week on week. Like-for-like performance has further improved, exceeding sales in 2019 already. They've just opened it already. More people are coming through the doors. EBITDA has improved 114% on a like-for-like basis compared to 2019. So it's going to get better. Cash.
Yeah. That was the important bit compared to 2019, not compared to when they were closed.
No, 2020. Yeah, they've gone back to 2019. Yeah.
They've got no restrictions at all, have they? Are they the same as like nightclubs and things where no one has to wear any face masks?
Not anymore. No one has. Who has then? Who has got restrictions now? No one has.
Shops still, don't they?
No, they
it's
don't.
Optional, then,
not in the UK, not in England, Steve. They mainly in Wales.
In Wales they do, yes.
I've gone into shops in Wales, though, I'm sure, without a mask. Have I?
No, to be honest, there's more and more people not wearing them now, to be honest, and they don't care, but it is still mandatory in Wales to go into shops.
And it's not. I went to Asda, and they say in the tannoys, it says, it's not mandatory, but for the safety of our staff and for everyone else, please wear a mask if you can do, don't they? They say it politely like that, don't they? So it's not mandatory, but they try and pressurise you into it.
And that changes it?
Yeah.
Okay.
But I just think now, listen, it's getting to the stage. There are colds going around now. I think they're worse than most COVID things that people are having, because we got vaccinated. It's like we realise that to a certain extent, I think, with a greater distance and zoom out a little bit, how over the top is on certain things, I mean, unless someone's coughing in your face. If you're in a big
Yeah, exactly. The chance of actually catching it like that, yes.
Yeah.
I've started licking people again now.
Yeah. Well, good. I'm glad you're back to normal.
Thanks.
Yeah. Or abnormal. Whatever it is.
Yeah.
I was say that also. One of the milestones there. Oh yeah, it's the FDA, of course, must play in. Gone over that. But Gfinity is an interesting one, right? Because even though it's suffering from a bit of, like I said, that supply issue with, drip feeds, they'll have their final results, not interims, because they're different period for the year, but they have their final results at end of October, right? Now this will be interesting because I mentioned this in the webinar. End of October, full year results out, so 12 months. This is the first full year John has been in control with the new business model. It will also be the first full year to show top-line growth of around 23%, but that's growing next year, on better margins. Like before, they had, if you look at the revenue they had a couple of years back, it was like 12 million, but they were making it, they were losing by 12 million as well, so it was no good. It wasn't really a business model. Now, I think you'll see big margins and top-line growth. And most analysts, right, most general analysts, don't pay any attention to trading updates, not even interims. They look at full year results on any company, these generic sites. So I think we're going to get some positive, feedback from this news, because GFIN hasn't had positive feedback on any of the results for years. And now John's come in, changed the business model, margins increasing. Now top line is starting to increase, and that's what most people look at. Top line, margins are getting better. So I think for the first time in a long time, Gfinity may get some positive publicity off these final results, which when you get positive publicity off results, not just news, it's a good thing, because that's sustainable, because of course it's fundamental. That's the valuation of the business. So I'm looking forward to that as well. Also, did you see that thing they just signed up with Nintendo to do another thing with Nintendo? They signed with some big names.
Yeah.
So it's very good indeed.
What's happening with TrueFin? It's just all quiet at the moment, isn't it? I think, but it's interesting.
They've got results out next week.
Oh, is it next week?
Okay. Yeah, so, I'm expecting to see, like I said, if you look at it, enterprise value. Go on, Steve. Come on, fella. What's enterprise value?
I don't know.
Okay, what's market cap? What's market capitalization?
The value of the company.
Yes, but is it? So, how do you work out market capitalization, Stevie? When you do your sums, what do you do?
Yeah, well,
it's the oh god, I forget now. It's the value of the company, and what's the other thing?
Yeah,
all the chickens,
and all the chickens. Yeah,
and all the meat you can eat, and under the price of £11. So if you look at all the shares in issue, right? Because they can't just issue shares willy-nilly. Some companies do, but they're only allowed to issue a certain amount of shares. Otherwise they have to go to a general meeting and all that stuff. But look at all the shares in issue, times it by the share price. That's the market capitalization. All right. So let's say you got 100 million shares in issue. They're a pound. Each share is £1. How much is the market cap? £1 times 100 million. How much is the market cap, Steve?
100 million.
Yes, that's it.
Yes. Ding.
Now, some people say that's a rough valuation of the company, but you're not looking at the cash or debt of the company there, are you really? That's just basically the shares times the share price. So how do you know what the valuation is? So some people use what's called enterprise value. So they get the market capitalization. So let's say this company's got, for example, 100 million shares, £1 a share, 100 million is the market cap, but they've got 5 million of debt and 20 million of cash. So where does that stack up then? Because hang on, so cash. So in fact, cash is an asset. So if you take that off, because of course you're trying to value the business, and if you take the cash off, look at the business itself. So say 100 million, take the cash off, that's 80 million. So that would make it obviously cheaper on a valuation basis. But you've got 5 million debt. That's a liability. That's a cost. So you add that on. So it's 85 million. So the enterprise value of that company, if it had 20 million of cash, 5 million debt, would be 85 million. See? So that's how you work out general. If you want to get a better, more accurate valuation of a company, enterprise value is a bit better than market cap because it takes into account cash and debt. So you take away the cash, add the debt. So look at Trufin, for example, right? 17 million in cash. What's their valuation at the moment? It's literally about 62. What did we get up there? I think it's 62. Where is it?
Where is it?
62, yeah. So if I do the math, I'm rubbish at mental math.
62 takes 17.
Yeah, 62 takes
45.
Pete's the maths guy. Come on.
Yeah, that's 45 million, right? They got no debt. So it's 45 million there, based on 4 companies they've got. There's fintech companies, 1 gaming company, 3 fintechs pretty much. And their revenue last year was literally, I think 12 million? Yeah. So 45 divided by 12 equals, what is it?
It's going to be 3.5.
3.5. So they are 3.5 times revenue. And if you say they go by 20% next year, pretty much, which is decent for a growth company, I think it's about 2.5 times revenue, which is quite cheap, I think.
Assuming they're not burning all that cash.
No, but they're not. They are going to be. If you look at the thing, they accumulated cash last year, so they're going to be cash flow positive. So essentially, they are a cheap company. And when you think about, 45, take the cash off, 45 million, one of those companies, that gaming company alone could be valued on that,
Yeah.
So the valuation of that company is underpinned by one company, pretty much. And also, so when you're ever looking at a company, it's a well-known phrase called GARP investing, which is called, it's an acronym, so it's growth at a reasonable price. So you've got to have growth, and then you've got to look at the price as well, the valuation of the company. So if you've got growth and you've got a reasonable price, that's a good investment, But you've got to have both those metrics. And in fact, I made a mistake with Steve asked with this, in Nexus. The valuation was reasonable, I thought. They didn't have any growth. And in fact, the growth is looking like it's actually getting a bit, more sort of pallid, a bit more diluted. It's not looking like it's growing. So the reason why the valuation is good is because there's no growth there. And if there's no growth there, the valuation probably isn't that good, actually, because it's not undervalued. It's there. It's cheap for a reason, So both sides of the equation, growth and a decent value. Get those two sorted, you should be fine, And obviously, how do you value a company? Yeah, basically that EV thing, a metric of revenue or sales. And the more, obviously, mature a company is, different ways of measure it. If a company is generating profits, you do it on a profit basis, multiple the profits. If it's not, maybe just doing it in cash, you've got EBITDA. If it's just new and just they have sales but no EBITDA already, then you go on a sales multiple. Because sooner or later, as they mature, they'll gravitate up that pole towards EBITDA positivity, then pre-tax profit. So, yes. Does that make any sense at all?
Yeah, I think that does.
Yeah. So, all right, and Steve, ask you again then. What's market cap?
Oh. I didn't realise it was going to be a test, sir.
Yeah, we're not doing tests on this. Come on.
Come on, Steve.
It is the value of the company multiplied by the amount of shares.
Well, it's amount of shares times the share price, right? Shares in issue times share price.
That's what I said, just the other way around.
Yeah, but don't say the value because it's not really the value.
That's what you're working out.
Yes, that's what you're working out. So it's the shares in issue times by the price. That's the market cap. Right. Now, how do you get from that to enterprise value? What do you add and take away?
You take away their cash.
Yes.
Their debt.
And you add the debt.
No, you take away the debt.
No, you add the debt.
No.
Debt is a cost, you see. It's more expensive.
You take away the debt.
Yeah, you take away the debt, Steve.
No, you don't.
You add the debt, Steve. Yeah. Do you understand why you add that? Because debt is a cost, you see, and that will make it more expensive. The debt will make the company more expensive to add it on, basically. Cash is obviously make the company cheaper if it's lots of cash.
Oh, right, yeah, got
you. Know what I'm saying?
Yeah.
And that's why, all this worry at the moment. It's funny, I've had a chat with Russ Mould just on macroeconomics. And they're saying that, because inflation goes up, and people have to pull back, you need a bit of inflation to encourage people to spend, If you've got deflation as prices are going down, people will not spend because well, why should I buy a fridge if it's going to be cheaper in 6 months' time? And then all of a sudden it compounds itself and knowing the economy just stops. So you want to encourage a bit of inflation, but you don't want rampant inflation because that means your money, the purchasing power of your money starts to become worthless, It's like, £10 a day is worth £5 next week. You don't want that because it becomes worthless. So you want a little bit, and the guide is from most central banks, including the Bank of England, 2% is the magic figure they come up with. But at the moment, the Bank of England we're now running at 4% because, of course, supply chain issues. People are demanding products we can't get, so people are just pushing prices up and all that stuff. Wages are going up as well, of course, and if wages go up, then employers have to pay people more. How do they get that money back? They put it on the cost of their products and all that stuff. But he's saying that, and how do you bring this down? You basically rise interest rates. And what effect does that have? 3 effects, really, interest rates, essentially. Any company that has debt, and lots of companies do have debt, of course, at the moment, a lot of companies have debt because it's cheap debt. It's very cheap and low interest rates. So if interest goes up, it'll cost them money. It'll hit their bottom line. They have to pay more back, for that debt. They'll also stop borrowing because, of course, they don't want to take on more expensive debt. Yep. And generally, people then will not. At the moment, there's been only been one game in town has been invested. There's no point putting your money in a bank account. It earns no interest. So a lot of money that may have sat in a bank account somewhere may have been invested. So when you have low interest rates, it really gets growth going. Then all of a sudden you put interest rates up. The opposite things happen. So but the trouble is, central banks need to do it, but central banks also have a lot of debt. And I think Russ was saying, Britain probably 2.5 is it trillion or whatever it was in debt. Even 1% of that is 25 billion or something like that. That's how much it'll cost the Bank of England. So they raise interest rates by 1%. It'll cost them 25 billion. I don't know the metrics or something like that. But so most central banks caught between a rock and a hard place. Rock has been inflation, hard place being debt. Now, what would they prefer? They probably prefer a bit more inflation to get the economies going, running a bit hot, rather than debt, because debt will affect everyone. And if sometimes the markets tank, it's because of the worry that central banks are going to pump interest rates. But they can't, because they've got so much debt at the moment. Yeah. They can't put it up. So how do they do this? Once you start going on this road, so I don't know if we're going to be here forever. I mean, inflation may go nuts. They may try and do one or two things. Maybe interest rates up by 1/4% or something ridiculous. But I mean,
well, I was going to say, won't they get when their hand be forced by inflation a bit, because it will just be like.
But most of them are saying that
they'll have to go up a little bit. Interest rates.
Most of them are saying though that they're happy to let inflation run a little bit because it's transitory. And why is that? Because then a lot of it's supply chain issues. They'll free up because, of course, if you've got demand for products, people will start making products. It may take a while to come online, but they'll start making products, and all of a sudden, it's market forces. That supply will come back on soon. Some people are arguing it's not transitory, or if it is transitory, it's a bit longer than what the central bank's suggesting. And the central banks are defending their position a little bit. They don't want to put interest rates up. They're saying, no, it's transitory. It's transitory. It'll be a couple of months, and then also going to be a couple of months. It'll be a half a year. It'll be half a year. It's been a half a year. It'll be every year. It'll be a year of inflation. And how long is transitory? So but
endless.
I know.
Yeah.
Any other stock stuff I'm talking about? GFIN,
I think we've covered all 5, haven't we? All the big 5, anyway.
The big 5, yes. Steve, anything you've oh, do you know what? Richard made these. I was scrolling down there. I wrote that down early in the week. There was a celebrity on. You know these celebrity SAS shows that on TV where you train like the SAS and have to do stuff like that. And quite a few celebrities have hurt themselves, apparently, injured themselves badly. Ripped their shoulders out and all this stuff. And Richard Medley said, he was chatting to one of the celebrities, he said, of course, one thing they don't teach you is how to kill someone. He said, that would add a whole new aspect to it.
No, Richard.
Are you serious? And Susanna said, well, yes, well, thank goodness they don't teach you to kill someone. Can you imagine a TV show where there's some celebrities killing people? He said, Richard Madeley was serious about that. Of course, what they don't teach you is to kill someone with bare hands.
Oh, man.
He's like, he doesn't see, he has no idea. Is he? Like, he is pure Alan Partridge. He's like, unbelievable. I think, Richard, you're insane. This murder is illegal. They don't want to teach people a murder on a celebrity show. I know, trying to grab ratings, but that's a bit over the top, isn't it?
Yeah. I don't know why they don't have fly-on-the-wall terrorist documentaries. Richard,
killing someone would not get passed Ofcom. Definitely wouldn't. You'd get some complaints for that, and you'd probably go to prison as well. I'd say, So I guarantee it if you're killing someone on live. I know. They
had to find someone better than Piers Morgan to replace him, didn't they?
I know, but they're trying to get sensible. Martin Lewis does my bloody head in, that guy. Oh,
why? What? Because of his money saving?
A lot of people call me. It's just too much. Shut up, Martin,
intense.
you fool.
Yeah, calm down, Martin.
Yeah, and just a bit patronising, I think. And I thought he was gay originally, did you? And then I realised he's married to that lady off BBC Click. You know, the blonde-haired Laura...
Yes.
Laura Litworth? No,
Lara Lewington.
Lara Lewington, yeah.
Yeah.
So I thought
Just some guilty moments beforehand, and now you realise he's straight.
Yeah, for her. Steve. Yeah. No, but but he's...
Right.
And I'm not a big fan of people say Mrs. so-and-so. And Mrs. Lewis says, shut up, you fool.
Right.
By the way, anyway, that's it. Any? Do you know what? TV recommendations. Honestly, have you seen anything?
I haven't really watched anything. I was going to say the Ryder Cup's on this weekend, isn't it?
Oh, hang on a sec. Yeah, I'm signed up for AJ and Usyk. We talked about this pre-recorded thing.
Oh yeah, and you're watching the boxing.
Are you going to watch that, Steve?
No, I'm
What?
not boxing.
I love the boxing. I don't know why. I know it's quite bad. People just hitting the crap out of each other.
I used to watch it and these last few years I haven't really got into it as much.
I'll stick it on if I'm watching it with someone else. Like if I was down with you, I know you quite often would buy the box, and but I wouldn't pay for it.
Usyk is good. He's not lost a fight. Like I said, he was Olympic champion on the same year that AJ was Olympic champion in 2012 in London. He was one weight division below AJ. That's the one thing that but he's taken some massive punches. He's not lost 18 fights. And I think Joshua's going to find it quite hard. Because if he wins this, he goes on to fight Tyson Fury then. If Tyson Fury wins against Deontay Wilder for the third time. But, so I think it's a biggie, a real biggie. One other thing, I was watching the treadmill the other day, and I have a second documentary that BBC again stuck into the Chinese. And I think about time. Not the Chinese people, the Chinese government. They're dreadful. They really are. And if you look at them now, there's one called Worth Watching, and you can't believe they're getting away with it. Do you know 8 in 10 industrial espionage court trials in the US is against China, right? They're so sneaky, unbelievable. You watch it, it's called, they've got an intelligence unit, basically spying on everyone. And when you look at all these, they're trying to expand the telecom networks, they're all part of the Chinese government. It's phenomenal. It's called Chinese Magic Weapon. And they are secretly, they're going to, already, they're too big for us to deal with. You wait until they really are the biggest.
Yeah.
I mean, what they're doing is dreadful. I mean, from human rights perspective to spying to acquiring land, it's nuts. Honestly, watch it. It's scary.
What was that? Is it on Netflix?
It's on BBC. It's called Chinese Magic Weapon. There's another one on there previously I saw on just the human rights side, just the way they, in Hong Kong where they shut everyone up and burn the shops down. If you're printing anything, against President Xi. Imagine it's funny now that Xi, isn't it? Peter, she wants a word with you. Does she? No, he does. Who? She. She or he? What she does? President, what are you talking about? Is it a he or she? it's a he, but it's she. What post-sex? Post-op or what?
It's fine to be he, she as well.
Yeah, exactly. I don't mind if it's a she or he. What is it? He or she? She. Okay, go and see him. Oh, what do you mean him? It's a she.
Isn't that's his second name though, isn't it?
No, President is his first name, yeah. She.
Sorry.
That's his first name, President.
Right.
Well,
President Xi Jinping.
He got the right job for him, didn't he?
Yeah, Jinping.
It's President Xi. Yeah, of course it is.
Yeah,
Okay.
President Xi. Yeah.
Okay.
He wants to see you.
Yeah.
Who?
Yeah.
She. Does she?
Well.
Yes, he does. Cool. Have you watched anything on TV, Steve? Hey, Steve, I've thought of this, right? I quite like, when I've had some rough times, last 6 months, the stock market, the stock's going down. And I've gone walking the dog. I've really quite liked music, in my headphones. And I've been in the forest walking my dog. I found myself sort of dancing in the forest almost. Just me and the dog in the morning.
Right. Okay.
And I'm thinking there should be a music therapy online disco dancing Zoom session. Do they have any of those, do you think?
There must be.
Probably out there, yeah. Well, Zoom is is it Zuma? What's that one?
Zuma. Yeah, Zuma. Maybe that's it. Yeah.
Yeah, that's one of them. Yeah, they do.
He plays for West Ham, I think.
Is he doing it?
No, Zumba.
Oh, that's it.
Yeah, no, he plays for Arsenal.
Something like that. Yeah, they do it.
Yeah. Okay. No, so I find it really listen, some good music, with dancing. I think it'd be quite good. But
like Speed Garage, was that what you listening to?
I don't know what it was. No, just nice uplifting.
I'd love to see you dancing in the forest with your dog.
Yeah. But
can you send a video next time?
Yeah, even when it's like you don't even dance songs, just go uplifting tunes. Do some. I was into Elvis the other day. Some Elvis moves in the forest. Yeah, Las Vegas, and yeah, it's good. Any other things, boys, you recommend on TV, video?
Well, it's the last episode of Vigil this week on BBC One. That's been cracking, in my opinion.
Vigil. Is that
I
Sir
haven't
Anne
watched
Jones?
that.
Is that Sir Anne Jones?
Yeah, I think it is.
Yeah.
Sir Anne Jones.
Steve's watched 5 episodes, doesn't know who's in it.
Is she brown hair, Steve, at shoulder length?
Yeah,
that must be her.
Sorry, I didn't really look at the actors on this one.
But she's quite well known, isn't she?
Yeah.
Yeah, okay.
And you got the guy from Line of Duty who he pretty much died at the very beginning.
Okay. I did watch Help. Jodie Comer and Stephen Graham. Was doing
was that good?
COVID. It's all right, yes, but it just shows you the inside of how panicky it was when, in care homes, she was a new employee on her own doing COVID. She couldn't get any ambulances, and one of her patients, or one of the clients or residents there was obviously had COVID, and no one was there to help her. So and everyone had gone down sick, basically. So yeah, it just shows you what it's like from the inside.
Oh, it sounds jolly.
Yeah. Certainly it's jolly, all right, yeah. Cool, all right then. Anything else then, boys?
No, I think that's enough.
Yeah, that's plenty, yeah. Yeah, Paddy couldn't make it, he said he couldn't.
No, okay. Well, I'm sure he's listened, so hi, Pad.
He's true to his word. He's probably still queuing for petrol.
Yeah, absolutely.
I've got mine anyway.
Yeah,
right,
that's a relief.
Yeah, that's the main thing. All right, cheers, guys. Speak next week.
Okay, bye.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.